Hello, how are you doing? Welcome along to FTUK's Tuesday US Open live stream. Hope you're doing well wherever you're watching from, and hope you've had a good session in the markets this morning. It's been relatively interesting to tell you the truth. The biggest news that we've got is what has happened on the euro with the GfK consumer confidence sentiment numbers out of Germany. The euro didn't like that one little bit. It came in slightly better than what we were expecting, but no, we will have a look at the prices on that in a second. And also as well, what we will be doing is getting ready for the biggest event of the day, and that is going to be the JOLTS turnover numbers, which are coming up in about an hour's time, I think. We've got half an hour before the US markets open. So, yeah, welcome along to the live stream. It's the third one we've done. Gosh, it feels like it's starting to become a bit of a familiar pattern. If you are interested in joining our Discord, all you need to do is scan that QR code that you can see on the screen. Head over there, and our lovely moderator, Reza, hard-working Reza, will take care of you in Discord. An amazing job that he does. That's the best place to find out everything that's happening at FTUK first of all. And of course, this is our fundamentals week. So there's tons and tons that we will be getting onto. And I've got some previews of stuff that's coming up later on the YouTube channel in the next few hours as well. So, right, let's jump straight in and let's recap what has been happening in Europe. We've got the GfK consumer sentiment numbers out of Germany for November. Slightly better than expected, minus 18.3 versus what was forecast as minus 20.5. Nevertheless, the euro is not really liked it, and we'll have a look at that in a second. But there's also some information out from the German Chambers of Industry and Commerce. That is the DIHK, and they have said that the economy is expected to contract by 0.2% this year. Previously, they forecast it to be flat, so they're not painting a particularly rosy picture in Germany at the moment. The economy is seen stagnating next year, the third consecutive year without growth. What is going wrong in Germany? Very, 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 very difficult, challenging times, considering what is supposed to be the powerhouse engine of the European Union. Let's have a look at the charts on that. Let me just bring up my I'm on the wrong page there. That is the page where you'll head to when you head on the links. But let's have a quick look at the market first of all. There you can see that euro there. This is the euro against the dollar. Now, this is where the audio squawk that we've been talking about, and the reason why we're doing this week is so important, because there's some extra context that you can't see in that price action. This area here, this was where that GfK consumers confidence came in, and you can see what looked like a relatively lackluster relief rally in the euro dropped off fairly swiftly, and then we're moved to the downside. We're only about 50 pips south of where we opened, of where we peaked out this morning in the European session. But on the audio squawk, I was paying attention throughout the morning, and they came in and they said that they'd spotted a large seller, don't quite know who, institutional of some description, maybe a commercial company, we don't know, but a large seller of euros against sterling. Now, if you look at the euro against the pound instead, you'll see a similar picture. So the euro's really come off. Now, without the audio squawk, you would never really have seen that context, and this is what you've got to understand as an FX trader, particularly if you're an FX trader in prop, is that the movements in one market can have a spillover effect. Remember that we're dealing with huge great big assets here. We're not dealing with dollars in this instance, we're dealing with euros against dollars, euros against pound. But if there's a big push in one currency in one direction, that can usually then spill over into some other market. So we know for a fact from listening to the audio squawk that we've had a large seller of euros this morning against sterling, and that I think has had a knock-on effect into the other markets as well. So it's not necessarily a euro dollar play, it's possibly more even a euro sterling play that is then sort of translated. Now, you wouldn't know that. Now, what you can do as an FX trader is you can take that and use that for looking for intraday opportunities by looking at these markets, because if we're a little bit too far south now, you could be looking for decent buyback opportunities against the dollar or against one of the other pairs. Do you see what I mean? So it's always useful information to have in your arsenal, which is something that I would not know if I didn't have the audio squawk running on it in the background. And there it is. There you can see it in front of you. That is the audio squawk there. Now, I'm going to go through this in some detail before we get to the end of Friday, but I want to concentrate on the jobs data at least for today, because we've got the budget coming up tomorrow, and that's going to keep us very, very busy in the session tomorrow. So maybe towards the end of the week, Thursday, we'll start to do a session on how to optimize and use this tool effectively. But yeah, so always just bear that in mind, that when you're looking at currencies, something can happen in one currency, but it can be reflected in one other currency that can then spill over into others as well. That is an important bit of context that gets missed all the time. Okay, so let's catch up on everything else that you need to know if you're getting ready in the US this morning as well. The Middle East, obviously ongoing. We get news about that every single day, and we're just looking for big major changes, but just get used to the buzzwords and the terms that surround that situation, because that's where when something happens, you need to understand exactly what that means. So the Iranian government an Iranian government spokesman today has said that they will raise their military budget by 200%, and the Qatari Foreign Ministry have also released a statement today through a spokesman saying that Qatar will work with the Biden administration until the last minute before the US election to reach a Gaza ceasefire deal. So if anything, if you know nothing else, if you understand nothing else, just understand that if you see on the news something happening in Qatar, then that can obviously that can obviously be a driver as to why the markets might potentially be moving if there is a peace deal on the table. And these things, they can happen at any point in time. And never ever forget, one of the best political phrases I ever came across was a phrase, let me just get the terminology right. When you always see these sort of like negotiations, they always go through the night, yeah, and you always have some sort of like camera pointed at a dark building as the mandarins, the political mandarins, are in there hashing out the deals. And the phrase was, what is unreasonable at 4 p.m. is always reasonable at 4 a.m. The point being is when these guys are trying to get deals together, once they've started to hash it out, by mid-afternoon, no one's budging. But once they're all tired and they've been there all night, they all start compromising. So always bear that in mind. Okay, we're not going to look at crude oil because we've done that to death over the last couple of sessions, but we are going to move on to just recap what's been happening in the United Kingdom. We've had data out this morning, quite a mix of it, and this is going to obviously tie in with what's happening tomorrow in the UK, the budget, and sterling has got a bit of a spring in its step, and it's nice to see that against the Swiss franc. I've got a vested interest in that. I've got it on my computer over there, but we have had the Bank of England consumer credit data. That came in lower. 123 billion versus the 130 billion expected, and the mortgage lending data that was pushed out as well on the wires as well this morning, that came in lower as well, but the mortgage approvals, they are up 65.65k, only slightly from what was expected to be 65,000. So yeah, mortgage approvals are going up very, very slightly, or if anything, they are holding their ground, and that is an important thing to consider. Now, sterling looks a little bit, it's looking good today. It really is. Now, we'll touch on it very briefly. I don't want to do any huge analysis because I want to save that for tomorrow. But if we just look at it against the dollar, dollar's looking, well, relatively stable at the moment. We just touched our session open area here against the dollar around about these 129.70 handles here. And you can see we're just holding that onto this 200-day SMA as well. I would say sideways at least, really, sterling, because you're not going to find that the market's going to want to push too far in one direction until we get some idea of what's going to happen in the budget tomorrow. Now, I started doing some research this morning on that, and so I'll put together a good presentation for us tomorrow that we can go through and understand exactly what we're expecting from the markets and from the budget. We can only put our best guess towards it because we don't actually know what's going to be said, but this is the sort of thing that will move the pound. So those key opportunities in the European session tomorrow, they're going to be sterling focused, or at least there's going to be a lot of emphasis on it. So that's important to just bear in mind. Obviously, we're looking particularly strong now against the euro, and obviously the Swiss franc as well. It's looking nice and healthy as well. And my only hope is that that is not a move higher to then suddenly just tank tomorrow. But, you know, you've got to be very, very careful how you look at these things on balance. Okay. Let's move on and let's talk about a key bit of information that's been out in Europe this morning. And this is a really, really important piece of news which you wouldn't necessarily get unless you were attached to a Newsquawk, you're attached to a good information provider, and this is out of China. When the Chinese decide to do something, when they speak, you've got to listen. There's a source out of China this morning saying that a China top legislative body, don't quite know who, is considering is approving a fresh fiscal package. Fiscal means tax. Fiscal package with greater than 10 trillion yuan on the 8th of November. That could announce a stronger fiscal package if Trump wins the US election. So remember, we're looking for an inflationary type Trump win. That could be then coupled with an incredibly dovish pushing of liquidity into the market by the Chinese through whichever capacity, whichever mechanism they decide. That would include a 6 trillion to address local government debt, and then also 4 trillion to buy idle land and property. That's a massive, massive amount of money if the Chinese actually decide to do that and we get a Trump victory. That could potentially rebalance the system. But what you've always got to remember about this sort of level of money is it's got to go somewhere. And the Chinese have a very, very strong habit of taking these huge amounts of wealth, pushing them into the other parts of the global financial markets sphere, as it were. So you'll find that some of that money will be pushing into equity markets. Famously, the New Zealand property market was really juiced by the Chinese because they took a lot of that growth and started to buy up key properties in New Zealand. That has a knock-on effect in the economy because it makes property prices more expensive, wages have to go up, it creates money coming into the systems, more spending goes on. That has a knock-on effect in growth in the country, into the debt markets in New Zealand, and then also the currency as well. So all of this stuff connects together. The Chinese would potentially do some of that. You've got to ask yourself, as soon as you read a news article like that, where would that money end up? Well, US equities, potentially, maybe. That puts a button under the US equities. It certainly could do. Let's have a quick look at the US equity markets. We'll stay focused on the S&P 500 because that's where I did my analysis over the weekend. You can just see it here on a 1 hour. Now, like I said before, we've got this huge amount of buying in this area here from 5,799 all the way down to 5,680. I can't see, unless we've got some serious money coming in to push this lower, I can't see how we're not going to find some decent quality support, even if we do retrace in the session coming up in about sort of like 18 minutes time. I think we are in a buy the dip territory land for US equities, and that type of a story coming out of China, if we get a Trump victory, I can't see how some of that money is not going to find its way into US equities. Money like that looks to seek yield, looks to seek a return. It's got to be parked somewhere, So there's no question that is an important news story. So that's the main stuff out of the wires over the last few hours. Now, what I want to move on to now is I want to quickly talk about our start point for non-farm payrolls. This is Fundamentals Week at FTUK, so this is all about trying to help people understand and show them how the news and what's going on around you in the world connects with the price action. Once you start to do it and you start to see it, we'll do all of the heavy lifting for you, but once you start to see it, your eyes will, it's like someone will take a paper bag off your head, and you're no longer just looking at a candle moving up and down with an order block or some sort of like fair value gap or a Fibonacci or just looking at a moving average or an RSI. You're a more rounded trader, and you may not necessarily understand everything, but you're on the right road. That's why it's so important. So today, this week is Jobs Week, and today is the start of that cycle because we have 3 key bits of jobs data every month from the United States. Some of it private, some of it government-led. The Bureau of Labor Statistics, that's the government body that handles employment and unemployment data. And today we get what is called the JOLTS jobs data printed on the wires, and that is going to be in, I think it's an hour's time, so it's coming up. You'll see it on the calendar. JOLTS stands for Job Openings and Labor Turnover. It's a government statistic, and what it basically does is it comprises of 3 key aspects. What they do is that they survey around about 20,000 businesses and government offices, so it's private and public all mixed together, and there's 2 bits of it that you need to pay attention to. There's basically basically the vacancies that are currently there, sitting there in the market. That tells us how much demand there is in the system in terms of, what is the health of that jobs market. But also as well, they measure how many people are quitting, how many people are leaving the jobs market. And that measures turnover, which is why it's called the job openings and labor turnover. Now, there's 3 bits of that go to make up those statistics, and they look at, we don't need to get too granular because this is only a gateway into starting to understand it. We look for what are described as layoffs or discharges. They are people that obviously just been made redundant or been have been laid off. Or we also look for quits, people that have quit the jobs market or maybe they've voluntarily resigned, and then I've unfortunately in a panic I didn't put the last one in, so I apologize for that. That is where people have died. So people that have or they, I think it's death or retirement. I think so. Let me put that one in. Retire. I apologize for that. So you get sort of deaths and retirements, that people that have left the workforce for that reason. Also people that have quit and or been made redundant or voluntarily resigned, and then also people that have been laid off as well. That goes together to make up the JOLTS numbers. Now, we are looking for a slightly lower number. That's the number we're looking for. You'll hear it on the audio squawk. Because they'll say it as soon as it gets printed. Previously, it was 8.04. So we're looking for a number that's lower than that. That is what the market thinks it's going to be. 7.99 million. That is where it is. Now, that's a slightly lower. That means the market is thinking that it's not quite as healthy. That's a lower number, not quite as good for the American economy. That is dovish. That's all you need to take. And the reason for looking at these things in a very filtered, black and white, binary way is because that's the way that the market thinks. You have to, because the information is so dense and there's so much of it. I mean, you could spend a weekend digging into that data to try and find out exactly what's gone on. And it's a good idea to do it if you're really into it, but you can't comprehend all of that in one go when you're making fast decisions. So the market has a tendency to always want to take all of these things and turn it into a binary thing, X equals Y or Y equals X. It tends to want to do that, and that's the way that you'll find that the market tends to work. So what we do is we think that the number is going to be slightly lower. If it is, or if it's even worse than what the market is expecting, that's a lower number. That is dovish. Now you can see here, this is where the journey of that JOLTS number has been. So you can see we have been trending down quite significantly. And once we got to July, look at that. Those job openings, they're starting to come up. So that's showing us the pressure now on the jobs market, on businesses and stuff. So you can see there's more job openings. But obviously then people will say, okay, well, that's a sign of the economy being really healthy. The question will be, where do we go from here? Have we reversed the trend, or are we now sort of just going to rotate back down, and that's just August was basically just an outlier? Let's see how that actually maps out. Now, the way that you would actually look at this from a trading point of view, it's not a bit of information that I would specifically want to try and make money out of in terms of I'd want to trade the actual number. You'll find people that will try and do that, but what's really valuable about this information is how we then look at the market reaction from what we were expecting to versus what we got, and then feed that into our analysis for non-farm payrolls on Friday. So by then we'll have the JOLTS number, and we'll also have the ADP number. That is the important bit. You'll find that will give us I'll paint it out on the chart so everyone can see by Friday, but we'll look at the market reaction to that. So I don't want to trade it, but I want to understand it, because by understanding if we get a lower number, we get a dovish reaction, I want to see what the market does, because this is what should be happening. We get a lower number, that's dovish. That means stocks up, dollar down. We get a higher number, that is hawkish. We should be getting a stocks down, which we're not going to get because it's so contained, but a dollar up play. Now, we've already had a lot of dollar up over the last 48 hours, but the point is all of that information together is going to show us when the jobs number gets printed, the market reaction should be playing into that formula. If it doesn't, that's a question mark. That's the information that I want to get. That's the information that I want to understand, because by the time we get to non-farm payrolls, it's going to be really, really clear of how we know how the market is thinking and feeling about the jobs that's been speckled around the economic calendar this week. That's why it's so important. So you don't need to trade it. Just listen out for the numbers, get yourself signed up to a Squawk, and then from there you'll be able to sort of just understand exactly how the markets are going to work with that information. So keep that formula in your head, write it down on a bit of paper, have it next to you on your desk, and then see how the market plays it. Look at the dollar, look at either the dollar index or euro dollar or the dollar against the yen, and then also the S&P 500 or the Dow, something like that. And this is how you learn. You will definitely benefit. Bear in mind that we get this data every single month, and you only get 12 opportunities every year to do this work. So make sure you start doing it today. It's really super important. I just love it. It's just I'm so passionate about it. Okay, right. So that is all of that. Now, what we have also got as well, obviously, because we're doing a full week of fundamentals and trying to connect it with price action, and then also, there's some amazing tools that we've got on offer as well, which I'll touch on in a minute. And we're doing live streams all week as well, and then we're going to ramp everything into non-farm payrolls. We have got an interview that I did the other day with the head of market analysis at Newsquawk, and it was a really good interview. We're going to post that on the YouTube channel later on today. So if you are interested in having a listen, it is really worth listening to what this guy is. A fantastic guy called Addon, and here's a little snippet of that interview for you now.
So our job is basically almost kind of like financial DJs. We're explaining to people in real time what's going on in the market in a breaking news fashion, but also commentary about why things are moving. So for example, if euro dollar has moved 20 pips in recent trades, then we explain to clients why that's the case. Or, if the US stock market is about to open, we'll explain the lie of the land, what we're looking out for at the open. And basically via the audio feed, because it's such a quick mechanism with which to deliver information, it's very useful rather than waiting for a text update or a journalist to write 300-400 words of copy about something, because by that time you've missed it. Ultimately, I have a desk full of analysts in there who are monitoring all these news sources, and we're making an editorial decision at all times. What do our clients, if they're traders, need to know at this point in time? And that's kind of what we offer for like the retail audience. Is we kind of there's such a huge learning curve, and it's so steep for people. Our tool is basically to flatten that curve and help traders, understand things a lot better.
Yeah, so it is worth catching. That's going to be posted on the YouTube channel later on today. So please make sure that you sort of watch out for that. And as soon as it's live, you'll see it publicly on the channel. Worth watching for sure. This is what we are basically doing. We've teamed up with Newsquawk this week. They are sponsoring our Fundamentals Week, and you can get a fantastic free trial of their professional audio feed and data feed software that will really you'll learn so much from it. It really is worth signing up for. You can get a free 14-day trial with us. They've connected it through us. We'll get you a 14-day trial, and that is on all of the accounts using the promo code News35. You get a free news trading add-on in there as well. It's only for 1-step and 2-step evaluations, but it's a fantastic offer, and that's going to connect with non-farm payrolls. So if you feel like you want to get involved in that as well, non-farm payrolls, that is going to be sponsored by the Trusted Prop, our friends at the Trusted Prop as well. They have sponsored that, and we're going to be giving away some trading accounts, 3 trading accounts, and 3 3-month subscriptions to Newsquawk. I've never seen an offer quite as good as that. It's absolutely amazing. All you need to do if you want to get involved in that is head over to Twitter, and you will see on the Twitter page, let me just bring it up here so you can see it. There it is in front of us there. You'll be able to see that tweet there on the top of our page. All you need to do is follow the rules on there, click on the form, and submit your guess for what you think the non-farm payrolls number is going to be. And the people that are closest to it, the 3 people, they will be winning an account, and we'll announce it either straight after the live stream, or we'll do it sort of like, soon after. But it's definitely worth having for sure. Okay, right, that's it. That's everything we've got for now. So a good session ahead. Pay attention to those JOLTS numbers. It's going to set us up very nicely for the non-farm payrolls on Friday. I will be back at 8 a.m. tomorrow morning UK time, where we will be covering the UK budget in detail. Sterling will be in focus, so definitely join us for that. I'll see you at 8 a.m. tomorrow morning.